This is huge news if you want to raise millions for your creator business. Hey everybody, jayhoovy here. And today is like one of those Disney Channel episodes where the cast from That's So Raven meet up with Zach and Cody at the Tipton Hotel.
How'd you know she was gonna trip? Don't y'all watch the news?
AKA two of my favorite things coming together. Finance and content creation. For those of you who don't know me, my name is John Hu. I'm a former Goldman Sachs investment banker, VC investor at Norwest Venture Partners, and Stanford MBA dropout turned content creator. I'm constantly breaking trends down in the creator economy and seeing how they translate into the business world. So today's video on how venture capitalists are investing in creators and people rather than just startups and businesses strikes really true to home. I think this trend is a game changer for the creator economy and likely for your creator business too. The creator economy is getting hotter and hotter every single day, just like my mixtape. Influencers and content creators are powering one of the largest paradigm shifts in how we create and consume media since the printing press, the radio, the television, or the carrier pigeon. Anyways, it's a big shift. Future of media, future of work. And naturally, investors want in because they want to make money. So that begs the question, how are venture capital firms buying stakes in creators? The simple answer is that they're buying a percentage of future earnings in different creators. But first things first, we're gonna do some venture capital 101. When a venture capitalist or an angel investor finds an early stage company that they think has a ton of potential, which usually means at least a 10x return, they invest in that company in exchange for equity in that business. The goal for that VC is to give the company the capital that it needs to grow, so that that company might grow into an IPO or get acquired by a massive company like Amazon or Google, which can result in a huge payday for the investor. And for the past couple of decades, this has been a great strategy for everyone involved. Venture capitalists have helped launch some of the biggest companies that shape our world today. Companies like Facebook, Uber, Spotify, Airbnb, and even Google have raised money from venture capitalists. But how will a VC invest in a creator rather than a company? This is where it gets interesting. There are now some VC funds that are offering funding to creators in exchange for equity in their personal brands. So just like the example before where an investor gives money to a company to get equity in the company, they're now giving money to get equity in a creator themselves. A recent example of this is Slow Ventures. Slow Ventures just raised a $20 million fund to invest in influencers. The idea is that this capital from Slow Ventures will help influencers achieve their vision and their dreams. That means they can use this capital to pay for a production team, get better distribution, work with better brands, and invest in themselves and their audience. And Slow Ventures is working with none other than the king of YouTube, Mr. Beast.
I just bought this house and I'm gonna give it to Chandler. Really? No. Bruh.
And just like VC investments into startups, this relationship will be more than just writing a check for a creator. The firms who are looking to make these kinds of investments in creators are going to help creators with their financial strategy, their go-to-market strategy, as well as their product and distribution strategy. So what does this mean for the broader creator economy? Historically, when investments start to flow in an industry, that industry starts to see massive growth. Just look at the internet. Even with the dot-com bubble, the internet has grown to take over our lives. So if you've been following the creator economy closely, you've likely seen many startups in this space start to raise VC funding. Companies like Patreon, Skillshare, and Kajabi have all received ample VC funding, which is why this shift to invest directly into creators isn't that surprising. This influx of cash into the ecosystem is going to formalize what many people have known for a long time. Influencers are more than just talented people in front of cameras. They're full-on media companies. This is kind of like how in Hollywood, investors actually invest in movies to bring them to theaters. You've got to make sure you have the right actors, the right production staff, and the right distribution channels. There's so many creators with innovative and exciting visions who don't have the budget to execute on those. And now venture capital firms can step in and help those creators make their dreams a reality. I think this is only the beginning of a creator funding ecosystem. We're not going to see just VC firms investing in creators, but I think we'll also start to see incubators and accelerators, like a Y Combinator for creators. But I'm also really worried. If the idea of VCs coming into the creator economy makes you a little nervous, you're not alone. VCs are trying to make a profit, which at times could come into huge conflict with a creator's mental and personal health. In the tech startup world, founders who raise capital from VCs for their company already feel a ton of pressure to perform. And in this case, if you're investing in just a creator, the creator is the business. And they're gonna feel even more pressure to perform that actually might hurt them in the long term. The creator industry is also full of young and inexperienced people. Many of the internet's biggest creators, especially on TikTok, are below the age of 21. Can you imagine the headaches that come with funding a group of 18-year-olds hundreds of thousands of dollars? Just think about the contract nuances themselves. Are these multi-year deals? Or does the VC have the right to all of your earnings for the rest of your life? And you have to distinguish between the person and the brand. I'm really worried that many young creators are gonna get taken advantage of as they seek investment capital. And lastly, there's a huge risk on the investor side. Investors can't, or at least shouldn't, control the content that their creators make. Unlike a traditional business where an investor can sit on the board of a company and have a strong say in what the company does with its product, today's creator environment doesn't have that same kind of legal infrastructure. So how much say should an investor get in a creator's business? Overall, I think investors investing in creators is a net positive for the creator economy. But there are huge risks and caveats that we're gonna need to figure out as an ecosystem. If you wanna stay up to date on the biggest investments in the creator economy, make sure to like and subscribe, as I'll be dropping 3 videos a week on how the industry is progressing.